Right now, the markets are weirdly quiet. Volatility is low, your portfolio is probably green. The news is talking about soft landings and new highs. But in finance, the most dangerous moment isn't when the news is screaming. It's when the news goes silent. Think of it like a tsunami. Before the big wave hits, the tide goes out. The water vanishes. It gets quiet. Let's make this simple. Markets run on something called liquidity. Think of liquidity like the oil in an engine. As long as there's oil, the car moves. For the last year, the government has been pouring oil into the engine, but they're running out of bottles. When the oil stops, the gears start to grind. Silence in the market happens when nobody wants to buy and nobody can sell. This is what we call a liquidity trap. And based on the current data, we are walking right into one. Look at 2007. Everyone remembers 2008 as the crash, but 2007 was the silence. People were still buying houses. Bankers were still getting bonuses. But behind the scenes, the oil had already dried up. The smart money usually leaves the room 5 minutes before the lights go out. They don't want to cause a panic because they need you to buy what they're selling. When the big players stop talking, it's usually because they've already exited the building. So, how do you prepare for the silence? You look at the three things nobody is talking about. The savings rate. People are spending their last cushion. The yield curve. It's been screaming for months, but we've started to ignore it. The credit freeze. Banks are making it harder to borrow. When the credit stops, the economy stops. Period. I'm not saying the world is ending. I'm saying the music is about to stop. And there are way more people than there are chairs. Don't get blinded by the green numbers today. The loudest crashes always start with a whisper. I used to be an investment banker. Now I just draw stickmen. Thanks for watching.